Shadim Shari. It is Saturday, March 8, 2025. Alright, let's get into it. Alright, let's see. Let's go to the 1 year chart. Bitcoin, not low enough to buy. I do have an order in to buy, but a couple actually at 82 and 80. This is of course Bitcoin future, but currently the Bitcoin price is roughly just under 86. But if we get anywhere at between 82 and 78, there is a nickel worth of orders sitting there, and perhaps even more. But for now, a nickel, which would bring my desired amount of Bitcoin to where I want it. Ever since the election and the run up, I have wanted to add 2 dimes into my stack of coins, and as of right now, I added 15 cents and be another nickel. And then, should there is a major breakdown, then there is enough money in the account to add another nickel. So a dime altogether. And that might be all I ever want to own as far as Bitcoin. Things can change. Alright. MicroStrategy. It was close. I was looking to trim up in the 325, but it didn't get there. If it get there, you bet. Okay, it's the confluence of the 50, the 100 will rise into it along with the 55th. So yeah, it will be a white spot. And should it dump into the 200 MA, buy. Okay, 236. Yeah. Hey, if you like it, my average is 270-ish. That's my average. For those that need a recap, I bought it somewhere here, initial, but then I add most of it down here. So not bad. Pretty happy that my average cost is below 270. Real quick before I go on Bitcoin, the Bitcoin strategic reserve was announced. The crypto bros are all upset because basically they wanted and expected, this is the key word, expected the government to announce along with the crypto reserve that they're gonna buy hundreds and $million worth of Bitcoin or crypto altogether in the next few years. And as of right now, the announcement is the strategic reserve is established, but they are trying to approach it with a neutral stand where they don't want to put in additional cash, additional investment from taxpayer in there. They want to figure out a way to add to it cash neutral from us, the taxpayer. And that got all or many of the crypto bros all upset. Here's the late breaking news to all you crypto bro shitbags out there. Okay, I'm calling you shitbags because that's what you are. We're broke. We are broke as a country. Where do we get a couple hundred millions, if not billions, to invest in crypto? Where? The expectation, the rant and raving, the pump, the lies, the propaganda. So shut up, please. Do us a favor as far as the people that like Bitcoin and crypto for the right reason. We're not shooting for the moon tomorrow. I've been in it since 2017. Enough with the nonsense. there's no rhyme or reason to the nonsense that they like to scream and yell. And we are broke. There is no money. Right now, Trump and his cabinet are trying to cut spending. Even balancing the budget is a near impossible task, let alone outlay a couple $100 million or billions to buy more Bitcoin. Shitbags. Nothing but the shitbags. Okay, so just be quiet. For us, for those that have common sense approach to investing, this is your chance to accumulate Bitcoin when other people are dumping. All right, let's move on. But I need to call out the shitbags, because exactly that's what they are, shitbags. I have worse term for them, but that would offend the soft mind of some of the viewers I have here. Not many. This is not a popular channel by any means, but even with 20 people watching, I wouldn't be shocked that more than the majority are very softies. All right. This is going to be a common theme for a lot of the chart that we're going to see today is TA-wise. Things come down to support, breath flow, and bounce. Is it a sign that all is good? Time to jump in? This is a common theme for all of them. Hard to say all of them, but the common theme here is let's chill. Let's watch the economic data for the next couple of days and weeks. It's not good, okay? It's for the first time in, I believe, 3 months since prior to the election, unemployment rate went up, right? Jobless claim, continuing claim went up. U6, the magic number, crossed 8%, right? So for those that need a recap, U6 is a number that actually take into account underemployed, because they factor in part-time jobs more correctly compared to the unemployment rate. If you don't know, unemployment rate count everyone the same. Doesn't matter if you work 10 hours a week or 40 hours a week, you employ. U6 count differently. So even though the unemployment rate is 4.1%, U6 factor in the underemployed, the part-time worker, and come up with a rate of 8% or higher, right? So for the first time in many, many years, it is over 8%, the U6. So all the data is pointing to weaker economy, and with earning coming up, can you believe it? First quarter is closing in 3 weeks. It will happen fast. It would not be a shocker that you're gonna see across the board a lot of revised projection on earnings for the year 2025 for a lot of businesses. Not every sector, but it would not be a surprise. So that being said, short term, this could be a short-term bottom, but if econ data continue to deteriorate further every week, because every Thursday is jobless claim, if that number continue to fall apart, lower we will go. There is no if, no buts about it. All right, there is no such thing as an equity market not having a 20% plus decline in a recession. If you're new, if you're young, and you think you know it all, go back and look at 2008, 2009. Go back and look at 2001, 2000, the years of the recession, and see how the equity market behaved. Okay, there is no immunity to a recession because earning will come down, revenue will come down, PE will come down. So for now, yeah, I'm not too excited, but if I was to play DIA, perhaps doing short spread below, but for now, I'm staying out. Right now, it was very tempting to add to QQQ. QQQ, I add at 491. That was my first re-entry into QQQ, was 491 back on this big day here earlier during the week. Now yesterday I did have an order in at 476 and I'm leaving it there. All right, actually to be exactly, it's 475.75, right where that fib is, and I'm keeping that there. So would I add to QQQ? Yes, but it had to be down there. All right, but it broke the 200. Now the last time it broke the 200, it was a one-day event. That was a screaming buy, right? We all know the big gap down, green candle, even if it's not a 52-week low, is a buy, and that was a buy, right? You get yourself a 20% return plus. Yeah, that was sweet, right? If you buy at 420, more like 30%. That was insane in 6 months. Yeah. For now, but I would add a little bit. SPY, a little bit better. It came down to the 200 and it settled over the 200. For now, a little bit better shape, but still. Bottom line is it violated ref low and came down to the fib and the other ref low. So TA wise, okay, a lot of things trade very TA wise. So it's not a shocking where they came down and where they stopped, where they found support and where they bounced. This, for the first time, touched the 200 in a long time. Look at this thing. Once again, how many times do I say it? If you think something would never see the 200 again, if you're that bullish on anything, think again, please. No such thing, okay? Whatever euphoria you have, it could last a long time, but then say hello to the 200. So if this thing break, oh boy. The next logical step, of course, is the ref low. Down here, way down at 540. So this thing can fall 6% easily, okay? Easily. And it's not that big, right? Think about it. 6% more? Yeah, come on. It's basically a 10% from the top. What happened so far is a minor correction. IWM, oh, ugly. Okay, now, so out of all the indices, I think IWM, for those that want to take a risk at small cap, that might be the place. It has come down significantly. It has come down to, hey, if you bought a year ago, say hello to zero return. Where's Tom Lee? What happened to Tom Lee? Is a genius who predicted, this is the best investment. I think he stopped. I have avoided listening to Tom Lee in a long time. So I think he has come off the IWM is the best investment after the failed profit call last year. It did okay, but if you compare IWM to QQQ, SPY, even DIA, it underperformed all of those. So, but for now, I take the contrary view that now is the time to add. Would I add to IWM? Yes, but my order is down here at the bottom here. All right. So if it come down anywhere below 200, yeah, I will play. I will play below 200. Max 7. Start out with my big loser for the week. Netflix. Oh my God. Right? I sold put spread thinking that, yeah, it should be safe in the 900. Right? Wrong. Wow. Okay. I thought for sure the gap fill would give it support. And on Thursday, yeah, I was confident that my put spread at 905, 890 would be safe. Wrong. Hammer. Took the L on that one, right? But it came down and it settled right at the 100. Like I said, TA wise. Wow. Stunning correction, right? You're talking, when did you see basically a 15% move? Wow. Wiped out. Complete wiped out, right? So with that, let's redo the fib. Let's redo the fib. Now that the fib extension is a goner. Goner. 1064.5. There we go. Look at that. Look at that. All right. All right. So look at this beauty of the 61.8 fib. Look at that. Look at that. Right. So on further breakdown, yes. Okay. 825, 826 is the spot. So if you're patient, if there is further weakness in the QQQ and the sell-off in the equity market, say hello. Say hello. I think that will happen. The 200 MA over the next 3 weeks will rise into that spot. By the end of the quarter, it will rise into the 825 spot. And it will be a beautiful confluence. You got the 61.8, you got the ref low, and you got the 200 in 3 weeks or so. All right, so we'll see if my prediction comes through. Okay, so that I think I will get a chance. Yes, I take the L here. I saw a couple. I had to roll some put spread into the next couple weeks to mitigate the loss. But yeah. For the rest, I did okay. As far as Max 7, I saw put spread on many things. And many of them, well, outside of Netflix, they all turned a profit. So net, it was still a loss because the Netflix one was pretty painful. But Google, probably the better one of the Max 7 over the past week compared to Netflix because it came down a lot. It already came down a lot compared to Netflix, so it did okay. Would I buy? No. Would I add? Yes. But for now, selling put spread, I sold earlier during the week. I sold 165, 162 and a half spread. And it was low. There was time up here that I was selling for weeks. Put spread at the gap fill, right here, right? The gap fill, and then I think my timing lucked out that by the time it break and fill the gap, I didn't have any puts there. So I started to sell put down here, and it was safe. Would I add? No. Right now it's at the spot that it's a do nothing spot. Meta, interesting. Okay, interesting. I was looking to add, but my order is down here. Okay, down here at 586, and for now, it rests right at right above the 100. It came down, violated, and then bounced over. TA wise, a good spot for sure, 200 MA. It has not seen, this stock has not seen the 200 MA all year, going back 52 weeks. So yeah, it will come down. It will knock on the door of the 200 MA eventually. No rush. I have a small position, so I'm not, not itchy to do anything. Now Microsoft, I did have a put spread at 390 and below, and it was looking dicey, but it prevailed. It prevailed by the end of the day. I was watching it near the end, and I'm like, about 3:45-ish. I'm just like, yeah, it's all right. I think it's safe, and I walked away before 4 o'clock. At like, I think 3:55, I'm just like, all right, it looked like it's gonna settle and safe. So yeah, it's done. Would I sell put spread again on weakness? The answer is yes, but look at this, okay? 52-week low, green candle, not a bad place to buy. Now, if it revisit the 52-week low, that's worth watching, because if that fail, we can go all the way down there, okay? So I do like Microsoft, but I bought enough that I'm fine with not adding more for now. Now Amazon, I also have a bunch of put spread, and that was looking dicey. Once again, I had put spread at 195 and below, right? And for a portion of yesterday, it looked dicey. They were looking dicey. I even had 190, the gap fill, right? And that was like, wow, it's. I have 2 or 3 put spread. No, I have 3. And yeah, I mean it's so. Here's the game. Okay, first of all, I did add share at the 200 MA right here. Right, I thought so far it did good. It come back, it has tested the 200 MA for a few times, all week long. It did. It settled above it, so that's not bad. Ref low, right? So you get the ref low, you got the 200 confluence as well as the channel low. So this is a strong support, so no doubt. But the more you test a support, the more likely it can break. So far it broke hard, but it bounced. So we'll see how it play out, right? I'm not in a hurry to add more, but if it broke and come down and fill the gap, yeah. Would I buy there? Maybe. Would I buy at the 61.8 Yes. So I'm more likely to let it break, fill the gap, and then buy at the 61.8 ish right here at 185-ish. Okay, so 185, 186 is a certainty to buy. I'm not sure if I would buy at the gap fill. For sure, if it filled the gap, I would sell 180, 178 put spread down here using this ref low as the last line of defense as well as the 61.8. Okay. Apple. Do nothing. There's nothing there to see. Nvidia. Oof. It's a tough one. Okay, it's a tough one. I can't be bullish on this one. I can't. Okay. I have a small position. I'm happy that I trim on this move here. It's down to a very small position. So, did I regret not selling all? Yeah. The answer is absolutely. I'm not going to sugarcoat it because I'm not bullish on Nvidia. I'm not bearish on it either, but the chart look ugly. Okay, the chart look like there is. I don't see any reason to be bullish. That's the thing. I'm not bearish on it. The chart looked bearish. Fundamental wise, I don't see a bullish reason. And that's the problem with me as far as staying in NVIDIA. If there is a bounce, I will be out. Where? Up there. Okay? Between 127 and above, I will be liquidating the rest. That's my plan. My plan is, if there is another revival bullish move like this kind of move, if I get anywhere between 128 and 135, I would say bye-bye. Last of the Max 7, Tesla. Oh boy. I did sell put spread. I saw put spread on most of the Max 7, and like I said, the only loser was Netflix, but it's a big loser. Would I sell put spread going into next week? It would have to be way down here. This gap fill. Okay, now I have not owned share of Tesla outright in a long time. I missed a lot of this. I said this many times. I'm not a good Tesla trader. I seem to miss many things on Tesla, many times. But if it come down here, I will buy. Right? Tesla has broken every single moving average. 20, 50, 100, 200. It's over. Okay? The rose is off. Doesn't matter what the crypto bros want to pump. It is over. I love to piss off the crypto bros. I do, because it's a cult. Okay, the crypto bros are a cult. It fill the gaps. Okay, it fill the gap. So if you're brave, here's your chance to buy some. I'm not brave. I can be stupid, but I try to be rational. And knowing how I am with Tesla, I could be wrong again as far as saying that, oh, I buy lower and I miss this chance and it rocket higher. Okay, who knows? Let's talk big tech. IBM, what a move. Wow. Why? I don't know. Okay. You ask me why, how, what the reason? I don't know. All I can say is, wow, if you have it, trim, please. Adobe, meandering. But here's the good news. When it came down here, it was in the middle of nowhere. But if you bought, congratulations. Not a huge candle, but I missed it. You know what I said? 52-week low green candle is a good signal, especially when it's 2 days in a row, right? So yeah, I missed that. I missed that signal. Regardless, it ran, came down. Now it's holding around a 61.8. So if you're long, make sure that it hold. If you want to buy, perhaps on a dip into the 50 MA, might be worth it, or sell put spread below 430 for the sake of safety. But I don't hate it here. I don't love it. I don't need to be in it. CRM in the buy zone. Yeah. I was watching it and I'm like, this white line, I was hoping it can hold the white line. It tried to for 2 days and then it break. And then it break the 200. And then it's ugly. It's in the buy zone, but I'm not buying. Okay. The last time it came down here, the last time it came into this, it ran hard. This time it came down, it could do one of these. Okay. Earning, not great. Not bad, but not good. Okay. It's one of those meh earning. Like, the guidance was kind of meh. It was like, trust me, if the guidance was bad, we would have seen something much worse. But it was a meh kind of guidance. So I'm watching it. I want to see what it's gonna do. It might do one of these for the next 30 days, like dance around. Now, if the overall market tank, then it can break down, and then it can happen. Okay, we'll see. But for now, no touch. All right, let's move on to pharma. Eli Lilly had a crazy week and a half. I'm out. I talk about it. I'm out. And just like IBM, I have no idea why it went so well, and who knows? Okay, who knows? Who knows what? The bad news is it broke the 20, and right now it's in the middle of nowhere. Okay, can it come down to the 200? Yeah. Would I buy at the 200? No. Is that the quickest no you heard? No. I crack myself up sometime. Would I buy at the confluence of the 50/100 and the fib? Yes. So for me, I wouldn't mind restocking the share that I sold over 900, way down here at 825-ish. In fact, I probably put it in an order like 823, 822, low balling it into the 50 MA. Yeah, but that would be my first spot. FV is rocking, has been rocking, but I think the top is in. Okay, but if you want to be greedy, up there, right? Not white line, extended white line. But for me, this big red up candle is a sign that the top is in. But who knows? I've been wrong on FV many times. Something that I have not talked about in a long time, but bib. Nice move off the bottom. Of course, I didn't get the confirmation of the big green candle that I want to. If this was a big green candle, I would have added, right? But it didn't give me that signal. Why didn't you? Anyhow, I'm watching this right here. This purple trend line, which is kind of, right? I guess it's resistant, right? And then it give up. So the confluence between that and the 100 MA is something worth watching. It would be bullish, very bullish. I think for bib to break that. Okay, if they can break that 100 along with the purple line, yeah, it's been a long time. Okay, the last time, look, it gapped down below the 100 and haven't seen it since July. Yeah, so it's a big deal. Okay, it's a big deal. The 100, look, the 100 act is somewhat of a support line of defense, and then once it gives, it poof, right? So it will be very bullish for this to happen, and then of course then we run to the up there. Merck, yeah, that was a signal. Green candle, 52-week low. How many times can I repeat this, right? Whatever I say going forward for your own good. 52-week low, green candle, buy signal. No matter how bad it looks, no matter how painful it is, if you get that signal, it's a go. Go. I'm watching it, and for now, it almost filled the gap, right? It almost. So the gap fill /100 MA, key for lift off into the 200. So watch that. All right, let's move on to banks. Okay, before banks, XLF. That's my first look Okay. Fill the gap. Look at that. TA wise. Okay. TA wise. Yeah. Wow. Right. Now, on a grand scheme of things, the financial sector is way above the 200, right? So have not seen the 200 all year. Come on, right? So can this thing come down? Yeah, absolutely. It can come down. We're halfway there. Okay, so if you look at from here, from 52 to 49, yeah, we're halfway there. All right. Basically, it's not a huge this is why I said in the chat group that we can double up the pain, right? And if you think that sounds horrible, no, it's not. It's 10%. If you think 10% down is bad from the top, boy, oh yeah, it's nothing. Okay, it can come down. I'm not bullish on this sector. Goldman Sachs is my largest exposure to this sector. I did not add. The last time I add was at 563 on this on the previous day, and I'm just like, I had an order in down here. If it fill the gap, absolutely. So for now, no hurry. Okay, no hurry. And guess what? F this. Okay, remove extension. It's over. Okay, it's over. The mania is over. Fifth retracement is in play now. Look at that. Is that random? No. Look at that. Look at that. It came right down to the 78.6 fib to bounce. Look at that. Now, if I was smart, which I know I'm not, if I was smart and changed the fib drawing before yesterday, then I would have thought that, hey, that was a good spot to buy. Look, it came down to ref low. Okay, it's not a random spot. It came down to ref low as well as a 61.8 fib. No, 78.6 fib. Beautiful spot. Not random. For the TA hater out there, learn. I love to add more lower. Morgan Stanley. It's time. It's time to redo the fib. Let's do it. Same spot. Okay, same spot. Mess that up. Okay. Morgan Stanley, I am more likely to add at the 200. It was close, but I don't need to chase it here, right? It has not seen the 200 since here. It's been almost a year. So, yeah, it's if the overall market get weaker, there is no way Morgan Stanley is gonna hold up. Okay. Bank of America, Warren Buffett finally looked smart. Remember, the news came out somewhere around here that he liquidated billions and billions of Bank of America somewhere back in October, right? Correct me if I'm wrong. And then for a while, he looked stupid. He missed 20% more. Okay? If you're liquidating in the 40-ish, low 40s, and you miss out 48, well, you miss 15% plus. That's a lot, but it filled the gap and more. Okay, so this is not good. Okay, this is an ugly chart. First of all, you fill the gap, you break the 200, and the next gap is down here, 39-ish, right? So, and guess what? It's time to redo the fib. Done. Where? What if we do the fib here? Okay, let's do it here. Let's see where it will show as a potential. 4808. All right. Oh, look at where the 61.8 fib is. It's kind of lined up right at the next gap fill. Look at that, right? 40. So for the bold and brave, I don't have any exposure to Bank of America, but 40 might be the spot. That's worth nibbling. And look where the 78 fib is, lined up with the other ref low right here at 38-ish. So yeah. So there's two spots, 40 and 38. And then the full retracement down to 35. Okay, so there you go. AXP came down. Let's redo the fib. Okay, 226. There we go. Broke the 200. Rise above. I liked it, but not enough to add. Now, the support, the 61.8, I might add. Okay, I wouldn't mind adding a little bit right at the 61.8 because that was. But it's dicey. I do like the 78.6 fib more because that was where there is a support here, right? So on massive sell-off into that ref low, yeah, that's the spot to add with confidence, right? And if that failed, then say hello to the full retracement. The one that I like the most, Visa. Once again, time to redo the fib. Let's do it from here. Because it kind of line up right here, right? So let's do the fib from here. Look at that. Look at that. Not low enough to buy, not high enough to sell. If it comes down to the 50, I would consider adding because the gap, the 50 will rise into the gap fill at 337-ish, okay? And yeah, I would add a little bit right there. I do like Visa. Would I add more at the 50? The 50, 100. The 100 will rise into the 320-ish range, okay? So eventually it will rise into the 61.8, okay? To me, if you within the next 3 weeks or so, this 100 MA is going to rise into the 61.8 fib, and that would be a great support spot should there is a massive dump in the market into that. So yeah, buy small here at the gap fill, but the big order would be at the 61.8 fib for me. All right, let's get off that and into oil. It's where it should be. All right. I have been on record to say that it makes no sense in the 80. None. Who bought this? Who bought? If you bought USO in the 80s, you deserve all of it. All of it, okay? Oh my God. I closed my short on this day here. On this day here. I mean, this one. That's when I closed my short. So for those that was more patient and close it a day or two later, congratulations. You make more money. Would I sell put spread? It would have to be below 68. Okay, it's not enough juice. I looked at it yesterday, and of course not yesterday. I missed it on this day. On this ugly day here, by the time I look at selling puts for the week at 68, it's already too late. It already bounced too much. It's not enough juice there. But if the economy continues to deteriorate, if we have peace in Ukraine, there is no reason for oil to be 80. We will see oil in the 60s, okay? Oxy, yeah, nothing, nada. Nothing from Warren Buffett, so shocking. CVX, make no sense right here, okay? ExxonMobil, hard no, okay? ExxonMobil behave more logically, right? If you look at Oxy and XOM compared to CVX, make no sense. LNG, right? The big, yeah, be careful, okay? LNG, be very careful, okay? This is the one that benefit the most with the nonsense in Ukraine and liquefied natural gas. So be very careful on this, okay? I've been saying if there's peace, say hello to the 200 in a hurry. What I do like and did add during the week is Halliburton, okay? I did not miss the green candle low here, okay? The green candle, 52-week low, I said, yeah, giddy up. I saw put spread. Actually, I sold naked put because I was willing to swallow up 100 shares. But I did add a few shares down here. So on weakness, add. The Schlumberger, I did not add, but I like it here. I like Halliburton more. Okay, it's that simple. I did add the MDU right at this price here, 16.6-ish. Okay, so there have been many chances to buy in the 16.6. If you have order there, which I do, I throw out small orders, and every time it trigger, I add another order. So it's slowly climbing. I'm about halfway into my desired position. So yeah, I welcome the chance to add more at this level. No ifs and buts about it, all right? So I do think a big breakout is coming. And if there is a breakout, 20%, a 20% return is very doable, okay, into the resistance up here. And yeah, this thing can go wild, okay? You can quote me on that. It can go wild. So yeah, if all the things I bought this week and the last week, the most excited I am is MDU. Right, let's end this on gold. Nothing to sell here. Okay, nothing to buy, nothing to sell here. I'm fine with where it is. I have not sold gold. In fact, let's just do this. Okay, let's redo the fib. I'm not sure if where should I do? No, you know what? I'm gonna do a fib extension at this right here. Yeah. Okay, that's how bullish I am with gold. Okay, it can go 3,000 gold. Yeah, it can. I am that bullish on gold. Oh no, what happened to my mouse? What happened to my computer? Uh-oh. Did it froze? Something is happening. I can't seem to locate my mouse. It had decided to disappear. What's going on? Look like that's the end. Something is going on with my computer and my internet. That might be it, people, for the stream today, because I seem to lose control of my computer for the first time. This is a brand new computer that I bought, and it's been great, but this is the first time that it froze up on me and I can't seem to do anything else. Anyhow, without being able to show you the chart, I like gold, I like GDX, but I'm not adding. Okay, I add a lot of, I add silver last week, not this week. Let them run. There's no need to do anything with this position, and that's it. Later, only if I can figure out how to shut this off. Since I have no control on my computer,